Welcome to DeFi Crypto today. Our topic today is the Luna UST Meltdown. And so what happened? Was it preventable? What lessons can we learn from this? So the video is going to be long, but we're putting timestamps under the video in the description and so on. So you'll be able to skip ahead if there are bits that you want to skip and look at differently. We're going to look at this like from various angles. There's going to be a historical perspective, and I also want you to there's an entertainment perspective as well. And we're going to see what can we do and what should be done and what we can do as investors, what the community, the crypto community should be doing, and so on. So there's a lot of stuff that I wanted to pack in this video. And also, we're going to see that this is not the first time stuff like this happens, okay? So there's a lot of fun aspects to this. And also, while I lost a lot of money on this, like millions of other people, there's the ways to make a buck out of this thing, okay? So we're going to look into that as well. All right. So let's have a quick look at what the price is at. So UST right now is essentially at 50 cents on the dollar. It lost, as we can see, 50% over the last week. And if we go down, because Luna has been moving down quite a bit. Luna is steady now at $2.58 and lost about 97% of its value in 2 days. Okay, so yeah, pretty dramatic, right? But don't panic. Okay, this is normal. This is crypto. This is investing. I've been investing since the 80s. Okay, it's not the first time I see market crashes and things go horribly wrong. Okay, I'm going to show you some of the stuff now. To distract you a little bit, I found this very apropos, interestingly enough, vis-a-vis Luna. What we're going to have is, I just want you to listen to the first few seconds of this very famous classical piece. And then we're going to see what it means, okay? So gonna try to make it not too loud. So we're gonna listen to Carmina Burana, the opening sequence of O Fortuna. Okay. Okay, we're not going to listen to the whole thing, although I love this piece. What we see here, interestingly, the word Luna shows up, and that's why I said it's very apropos. And Fortuna is the goddess of fortune from the ancient Greeks and Romans, okay? And they say, oh, fortune, like the moon, you are changing, okay? What does that mean? It's like Fortuna is the goddess that brings luck and takes it away, okay? So we're going to have a closer look at her. And they say you change like the moon. The moon changes, it wanes and waxes. So, sometimes you have the full moon, sometimes you have the new moon, and sometimes you just have a crescent and so on. So there's a little bit of moon, more moon, less moon, and so on. That's what they mean, okay? In this song. So this is the goddess of fortune. She's holding here the cornucopia. Cornucopia is the horn of plenty. The story behind this is that Jupiter was playing with his favorite bull, and because Jupiter was so strong, he broke the bull's horn. And the bull was very miserable about that. And Jupiter said, "Oh, okay, all right. I'm going to magically transform this horn, and lots of good things will come out of it. So, like food and money and everything. Okay. So typically here, I think we see fruit coming out of this one. Yeah, fruit and plants coming out of this one. But sometimes you see Fortuna holding a cornucopia with gold coins coming out and so on. I think this is a stick that she uses to break your legs from time to time. But so there is like a good aspect of Fortuna and there's a bad aspect of Fortuna. Okay. And very often, Fortuna is represented, like we can see here. She's on a flying ball, which sometimes is a flying wheel. And it has kind of wings on each side. And notice here, if we close up, that Fortuna is blind. Fortuna gives rewards to people indiscriminately. She doesn't care who you are. From time to time, you're going to get rewards, and from time to time, you're going to get calamities and punishments and whatnot. Okay? So, as we can see here, the people on this side are getting a ton of money and good things and food and whatnot. And here they're getting demons. We're representing diseases and disasters and bombs and whatnot. All right. And this is another representation of Fortuna with the Wheel of Fortune. That's where it comes from. And you can see here that you have some characters all around the wheel. And you start at the bottom. You're in misery and essentially hell, pretty much. And then you start climbing yourself out of that dread. Okay. And then you reach the top of the wheel where you think you're king of the world. Okay. And this guy's being crowned right now. And then soon after getting his crown, he's losing it. And he's being pushed back down. Okay. So you can look at the evolution of many cycles that you have in business. Okay, that's why we have like recessions. Recessions are down here, and right now we're pretty much over here. Okay, we're falling into a recession, and eventually the recession's over, and we get out of it. We start making a lot of money, and at some point we're making everything looks great. Okay, the stock market is exuberant. The crypto market is going up like crazy. Everybody thinks they're going to become millionaires, and the next thing you know, we're going back down. Okay, and that's all controlled by the goddess of fortune, and that's why in the song they really hate her. They say, "Why you bring so much misery to my life?" They sing. But you have to understand that investment markets follow this model. It's psychological. Okay, you don't have to believe in the goddess of fortune and worship her or anything like that. But you have to understand that investment markets follow psychology. Okay? And people follow this instinctively. Okay? So Luna just a few days ago was close to $100 a token. Now it's down to 2. Okay? And it had a very good progression for a long time. But don't forget, this is not the first time that UST is off peg. We're almost to the day a year ago, UST went off peg when Bitcoin had a major crash. Okay, everybody went crazy. Okay, so and then it got back its peg. Eventually, it took a few days, and it got back its peg. So the end of the world did not happen. People, when they start following like this, okay, always think the end of the world's happening. And they think that they'll never get back out of the shithole that they're down when they're down here. Okay? You have to understand these market cycles. They turn like this wheel. It always follows this model. Always. For thousands of years, people have noticed this. Okay? And that's why I wanted to show you this fortune thingy. All right? See, you have the same wheel of fortune here from La Roue de Fortune, from the tarot. Okay, this is the Tarot de Marseille, for instance. But if you play with tarot cards, you have a wheel of fortune. The wheel is sometimes shows like these creatures that are going up and down the wheel. Okay, but to represent that cycle. Sometimes it's more abstract, but it's the same principle. It's the same principle. All right, enough about that. Now, I wanted to show you that this is not the first time that some major whale breaks the system. Okay? That's what whales do. Here, George Soros, the very famous billionaire, made his life purpose to break things, okay, and to enrich himself at the expense of millions of people. Okay? You may think that's evil, but you may also think that we need people like this, okay, to have smarter financial systems in place. He saw that something was broken, okay, that something could be broken, and he broke it to teach people a lesson and enrich himself at the same time. Okay, and that's what happened to Luna. Okay, the Luna UST system. And we're going to see that today. So George Soros, back in 97, broke the Bank of Thailand. And not just the Bank of Thailand, he broke all of Southeast Asia. About 500 million people lost money because of this guy. Okay, Thailand got affected, Malaysia got affected, Indonesia got affected, and several other countries in Southeast Asia. He made the entire region collapse. And it was not the first time. Even went in England, we see that somewhere in here, 1992. The Quantum Fund bet against the Bank of England in 1992. It was one of his most famous trades, okay? He almost broke the UK economy. Okay, he doesn't care who he hurts. Okay, he's totally agnostic about that. Okay, see, one of the most controversial trades or groups of trades put on by his quantum fund was against a basket of Asian currencies, specifically the currencies of Thailand and Malaysia, just before 1997 to 1998 Asian financial crisis. So he was directly involved in triggering the Asian financial crisis. Okay, he placed some bets against those countries. See, it says here, so he started attacking Thailand and Malaysia, and then the tremors spread to other Southeast Asian countries, including Malaysia, Indonesia, the Philippines, and then it went all the way to South Korea, Hong Kong, and China. So almost 2 billion people got affected by his trades. Okay, and then it says the year after Russia and Brazil started their economies enter a free fall, and Japan fell into recession, and the U.S. financial system balked at the possible bankruptcy and infamous long-term capital management. So it went like a domino effect. Okay, it started with Bank of Thailand, and then Malaysia, and then it just spread around the planet like that. Now, there is some aspects of what's going on with Terra and UST right now that are going to spread all around crypto, because Bitcoin's involved, Ethereum's involved, AVAX's involved. You know, a lot of people are going to lose money, okay, because of the whales that decided to crash Luna and UST. All right, so if we have a closer look, what I want to show you though is that the entire market has been going crazy. This is Bitcoin. It's been going down like from around 40,000 to 29,000 earlier today. But now there's kind of a recovery for Bitcoin. If we look at it, look at deep this crash was today. This is just a few hours ago. And it mostly recovered. It mostly recovered for the day. So we're back to $31,000 right now. But yeah, like people are too darn nervous. Okay, which brings a lot of opportunities for smart investors. Okay, they love this. First of all, because they can make money when things go crazy like this. Okay, I'll show you examples of that shortly. But also, when there's extreme fear, the smartest investors, like Warren Buffett, I made a video about him saying he was stupid. He's stupid when it comes to crypto. Okay, he doesn't get it. But when it comes to other investments like the stock market, he's very wise. Okay, I've been following him for decades. Okay, and he's not the only one that is worth following. There's another one, John Templeton, who died several decades ago. He was already almost 100 when he died, who had used very similar investment strategies. Okay, and basically, when you see something like this, it's time to buy. If you believe in the asset in question, like this is Bitcoin, okay, this is probably the most trusted crypto that exists at the moment. If you see a dumping like this and you believe in Bitcoin, your first reaction is, should I buy it now? Not should I sell it now? Should I buy it now? Okay? Why? Because it's selling at the bargain price. John Templeton did not know about crypto, obviously, but he knew a lot about stocks. And when he had some stocks that he really believed in, okay, what he would do is place some buy orders in advance, anticipating market crashes. So if his favorite stocks, if he would expect his favorite stock at some point to go down, if there's a market crash, like he would put a buy order at, let's say, at 70% price dump. Okay, so if it was $100, he would put an automatic buy order at 30 or 35 or even 40. Okay, because he said instinctively he would want to sell and may not have the courage to buy, but he discovered that by putting these buy orders in advance when the market crashes, that's when you make the best money. Okay, because they're selling at a bargain. At $29, Bitcoin's a bargain. I'm sorry if you think anything else, but Bitcoin was a bargain at that price. And soon people realized it, and that's why it jumped back up so quickly. Okay, then there was a little bit too much exuberance here, and then went back down, and so on. Doesn't mean that tomorrow it's not going to go down to 25,000 or 20,000 or even 5,000, but it's a bargain at that price. 5,000 is even more of a bargain. Obviously, if Bitcoin went down to 5,000, I'd sell everything I own and jump on it. Okay, which is not investment advice. But I would seriously jump on Bitcoin at 5,000. That's for sure. Okay, when everybody is nose bleeding because the market is crashing and everything, I'm looking at this and I'm like, ooh, wow. What should we buy now? That's how I look at things, okay? And that's what good investors should do. The smart investors, that's what they're doing. If you look at Warren Buffett right now, he's on a buying spree. He's been spending $41 billion buying assets right now when the market's crashing. That's what he's been doing. All right. So now this is Luna. Luna's been doing super bad. Okay, it's crashing. Yeah, terrible. All right, So yeah, it lost most of its value. It's sitting at $2.15 at the moment. Okay, went up a little bit, now it came back down. People are still depressed about Luna. They don't know what to think. They think it's going to go down to zero, and they're trying to push it down to zero by doing that. This is becoming a self-fulfilling prophecy. Okay, remember the wheel. Okay, all they see is that they're going down, and they can't think that they're going to go back up. Okay, remember that the wheel of fortune. Okay. And here we've got, yeah, that's Luna right now, crashing like, this is the Luna futures market on Binance. Why am I showing you the Luna futures? You could make a freaking fortune here. Okay, if you went and you sold here, for instance, okay, in the last few minutes, and you let it short all the way there, you'd make all these price differences, you'd make that as a profit. Okay, and if you were smart and you shorted it a couple days ago, okay, before the entire market crashed, I can't show you right now. If you go on perp, you could do it on perp as well. This is yeah. So if we scroll back, all the data I want to show you. But anyway, if you went from when it was here, it was at $25. That was yesterday. But if you went from $92 to now, you would pocket $90 profit if you were shorting it. Okay, there's a ton of money to be made. I found this here. This guy went on Binance Futures, shorted Luna at 50x, went from $92 to $2.19, and made a profit of 205,000% in a couple of days. Okay, so learn how to do these things. Okay, markets going wild either up or down are profitable markets. Okay, there's always an opportunity. Experienced traders want more volatility, and that's why they love crypto, because there's so much volatility. Okay, it's 10 to 100 times more volatile than the stock market. Okay, and they love this because they can do this kind of stuff. Okay, and especially because on several futures market, you can go like 50x, 100x or more. Okay, depending on the market you're using. Okay, and if you're very clever, okay, you can make a pile of money. Now, again, I'm not saying this is investment advice because it's fantastically risky, and you can lose all your money in seconds. Okay, so learn how to do this safely. There are ways to do this. Okay, this guy made a bundle on this. Okay, so obviously there's a way to make money. Otherwise, nobody would trade on this thing if everybody would lose money, right? So that's what I'm saying. Most people, 95% probably lose money on futures trading, okay? And that's why Binance makes so much money. But for the 5% that are more experienced and understand how the market works, understand how the futures work, these are great opportunities. Okay. All right. Now, what we're going to, let's go back to my presentation, and then we're going to review step by step what happened and what we can do about it. So what happened? It's a good old-fashioned bank run that was triggered by a whale. We're not. I don't think the whale's been identified yet. Some people said it was Citadel, but Citadel doesn't trade crypto. So that wasn't Citadel. So the attacker OTC'd accumulated $1 billion of UST. Then he borrowed $3 billion in Bitcoin. So it's a big whale, okay? It's not a small whale. And then spread around some FUD about depegging and bank runs and whatnot, okay? Then quickly dump their $3 billion BTC on the market to trigger a wider panic. And I'm going to go through all the steps that the guy discovered about this, okay? So you have to understand that in order to do this, okay, you cannot do this if you're not planning this for a while, okay? You cannot just have $1 billion in your pocket like this overnight. Most people cannot do that. So you have to, there is a time, okay, you need to accumulate this, okay? Same here, borrowing $3 billion in BTC, you know. I don't know about you, but I can't borrow $3 billion in BTC in the next 5 minutes. So some people have been planning this for a while, okay, and spread around some FUD, okay. Again, that takes planning, okay. So somebody found a weak spot in the Terra Luna system and said, okay, I think I know how to really wreck this and pocket a ton of cash. And when they were all set up, they triggered this, okay, and they let it roll, okay, and they just let market psychology happen. People panic, okay, when they saw that the Bitcoins were dumped, okay. And when Bitcoin and UST and Luna are linked together because the Luna Foundation accumulated a lot of Bitcoin, right? So it had a domino effect, okay? And some people start panicking because they read the FUD, so they start selling their Lunas. They start, withdrawing their UST and so on, and then everything went crazy. So let's look at what the guy is talking about here. So it says here, 10 minutes after LFG, that's the Luna Foundation guard, pull some liquidity from Curve in preparation for the 4 pool, the attackers pounce. Firstly, our liquidity from Curve needed just 350 million UST to do that. Then start dumping their UST on Binance, creating a small depeg. The Terra Market module figured for 150 million daily throughput for peg restoration would be enough if liquidity on Curve was the intended 4 billion instead of 350. People in small panic because BTC was tanking, and there was a small UST depeg for a while. It was like about 92 cents on the dollar, and so LFG started selling BTC to restore the peg, and that's exactly what the attackers wanted because they've shorted BTC. They wanted BTC to go down, right? LFG dumping BTC while attackers putting pressure on by dumping UST. The more BTC sold, the lower BTC tank, increasing panic, and the more UST sell pressure the attackers needed. So, as I said, it went like a domino effect, and the downturn accelerated. Okay, so there was a small depeg and a bigger depeg, and then Bitcoin went down and further down and so on. So they were making money like crazy, shorting everything. It was a very smart move. Finally, people mass panicking. That's what we've seen in the last 2 days. And mass congestion hit the chains. Yeah, you couldn't transact. The centralized exchanges suspended withdrawals, and manure hit the fan. Bank run on Anchor, jump. LFG likely realized what's happening somewhere in the middle of their BTC reserve bag, stopped dumping BTC to save the peg, and let it burn. So finally they realized somebody was attacking them. And they decided, okay, let's keep the Bitcoin. If we keep selling it, and it's just going to make matters worse. Now, this was yesterday. It says the peg was being restored naturally via the market module, but now it's the peg is worse. Okay, so it went back up yesterday, but then down again. So he says all this crash here would not have been economically viable if the 4 pool was live, because clearing the 4 pool alone would have required $3 billion instead of 350 million. The timing was not a coincidence. So the people who did this knew exactly what LFG was trying to do on Curve. Okay. Basically, LFG was trying to fix the system by using Curve, and they didn't have time to do it. Okay, these guys basically rug pulled them. Okay, so they cut the grass under their feet. Okay, all right. So what we have here. So this is our friend George Soros. Okay, so that they're showing that there's an analogy between what's happening and what this means. Okay, so it says here how to make over $800 million in crypto attacking the once third largest stablecoin, Soros style. Everyone's talking about the UST attack right now, including Janet Yellen, who wants to regulate it out of existence, obviously. But no one is talking about how much money the attacker made or how brilliant it was. Let's dig in. So this is the story retold a different way and with more detail. So we're going to go through that because I think it's important to understand why this is happening. Okay. So the story starts in late March when the Luna Foundation Guard, or LFG, starts buying BTC to help back the UST. LFG started accumulating BTC on March 22nd. By March 26th, had over $1 billion BTC position. This is like one that made this trade or attack brilliant. The LFG, okay, let's just confirm that. The second leg comes in the form of the 4 pool frax announcement for UST on April 1st. Decided the second leg needed to help execute the strategy on in a capital efficient way. Liquidity will be lower and then the attack is on. So they were creating this 4 pool, UST, frax, USDC, USDT on Curve. But because there was only $350 million in there, it was easy to wreck it up. So we don't know when the attacker borrowed 100,000 Bitcoin to start the position, other than it was sold into quants buying self-speculation. LFG bought 15K BTC between March 27 and April 11. So let's just state the average price between these dates, 42K. So if you have a $4.2 billion short position built, over the same time the attackers built a 1 billion OTC position in UST, the stage is now set to create a run on the bank and get paid on your BTC short in anticipation of the 4 pool. LFG initially removes 150 million from the 3 pool liquidity. So they show that here, I guess. Yeah, they show the transaction. So the liquidity was pulled on May 8th. Then the attacker uses 350 million of UST to drain Curve liquidity, and LFG pulls another $100 million of liquidity. So they just dried up all the liquidity in there very easily. But it only starts to depeg around 0.972 at the lows. LFG begins selling BTC to defend the peg, causing downward pressure on BTC while the run on UST is just getting started. Okay, so they just made it worse by selling their BTC. Okay. With the Curve liquidity drain, the attacker used the remainder of their 1 billion OTC UST position, 650 million or so, to start offloading on Binance. As withdrawals from anchors turned from concern to panic, this caused a real depeg as people fled for the exits. This is what they wanted. So around here, the LFG sold their Bitcoin, trying to bring back the peg, but that caused a panic on Bitcoin, which pushed the price down further. And then the attacker sold their UST position on Binance, and there you go. Everybody started panicking, and that pushed the price super low. So it did recover at that time a day ago, but now it's much lower than this again. So LFG is selling BTC to restore the peg, while the attacker is selling UST on Binance. Eventually, the chain gets congested, and the centralized exchange suspends withdrawals of UST, fueling the bank run panic. USC depegs to 60 cents, and at the bottom now it's around 50 cents, so it's even worse today. Okay, wow, BTC bleeds out, even better. You can see here total crash, like it's vertical. It's fantastic. Love to watch that. Now the crypto community panics as they wonder how much BTC will be sold to keep the peg. There are liquidations across the board, and Luna pukes because of its redemption mechanism. The attacker very well could have shorted Luna as well, most likely did. And BTC fell 25% from 42 to 31K, and then went down to 29 a bit earlier today. So how much did our attacker make? There aren't details on where they covered, obviously. But if they are able to cover and buy back the entire position at 32K, that means they made around $952 million at least by doing this short. Close to $1 billion profit. Not bad. So yeah, it's raining money at their place right now. On the 350 million USD curve dumps, I don't think they took much of a chance, took much of a loss. Let's assume 3% or just about 11 million. And let's assume that all the Binance dumps were done at 80 cents. That's another 125 million loss of doing business. So a grand total profit of 815 million, give or take. BTC was the perfect playground for the take, as the liquidity was there to pull it off, while having LFG involved in BTC and foreseeing that they would sell to keep the peg and prevent Luna from dying was the kicker. Lastly, the liquidity being low on the 3 pool and advance of 4 pool allowed the attacker to drain it with only 350 million, causing the broader panic in both BTC and UST. Any shorts on Luna would have added a lot of P&L here as well, which is falling 65%. Now it's more like 98%. And that's about it. Yeah, so very interesting attack. Okay, it was planned. Look, the Terra ecosystem was designed pretty well. Okay, for a whole year it did really well, but they did not anticipate this kind of attack. Okay, in crypto, okay, you have to anticipate the worst. Okay, this is pretty much the worst. Okay. Why? Because these people that are doing this, these attackers, are professionals, okay? They run hedge funds and things like that, okay? The hedge fund managers, okay, are the spawn of the devil, if you don't know, okay? The entire training is how can we screw people to make more money? Okay, and they're very smart, and they know. They look at they understand how your system works. Okay, they study your system, they analyze it, and then they say, okay, if we do this, this, and this, we're going to empty the entire treasury. Okay, or we're going to crash that token to zero. Okay, they know what to do. They know what to do to wreck the system completely, okay? And that's their purpose. Okay, that's their purpose. They exist to do that, and it's allowed. It's not illegal. Okay, you saw George Soros screwing, in an entire continent. Okay, and he made billions out of that. He's not in jail for that. These guys will never be in jail for that. What you have to do when you build a system in crypto, you have to make it more resilient. You have to plan for those types of attacks. It's difficult to do. It's not an easy task, okay? Because there's always a smart ass that's going to find a new way to wreck the system, okay? So it's unfortunate, but it happened. All right, so what's next, right? So was it preventable? Possibly. Some people saw vulnerabilities in the system, but they were ignored. So I'll show you an example. Freddie Reynolds. He actually contacted Do Kwon, and Do Kwon thought that was bullshit. So it says here, a few weeks ago, I responded to this guy's tweet with a brief outline of how a wealthy attacker could not only break Terra money, profit heavily doing it with a Soros-style Black Wednesday attack. See, Soros keeps popping up. Okay. Below, I provide a detailed breakdown, $1 billion capital needed. So you see that there are several kinds of attacks that could have happened. So I'm not going to read through his attack. It's slightly different from what actually happened in the last 2 days. But he explains in detail his way on how he would have done it if he had $1 billion to attack with. Okay. So, and I like this kind of stuff because if I would have been Do Kwon, I would have looked at this very seriously, which apparently he didn't. Okay, according to this guy, Freddie has a message on his, if we go on his page. See, he did contact Do Kwon at some point. Do Kwon did not like it at all. That's the least I can say. Probably the most retarded thread I've read this decade. Silence is a perfectly acceptable option if you're stupid. Billionaires in my following. Go ahead, see what happens. So he didn't take it seriously. Now, it's not the exact same attack. Okay, be careful. What this guy felt is that it would be possible to attack the Terra system and bring it down to its knees using his method. Okay, if you want to study his method and if you want to try to crash Terra Luna, read his thread. But when you're a developer for a project, you should definitely look for ways that things can go wrong. Okay, especially, I mean, at one point, Terra had $25 billion in there. Okay, it was like a huge part of the DeFi world. Okay, now it's a lot less, unfortunately. For those that are curious, you can have a look at DeFi Llama. So if we go to DeFi Llama, where are we at? Look at the chains at DeFi Llama and see Terra is standing right now. Yeah, see, Terra was number 2 2 days ago. Now it's down to number 6. Wow, look at this. It lost 87% in the last 7 days. Okay, it's now down to only $3.75 billion. Now, if we look at the chart, look at this. Look at this. Look at how fast it crashed. Okay, it's down here now. It was here. It was like $28 billion just a couple of days ago. And now it's 3.7. Amazing, eh? That's pretty. See, 71% down in 1 day. Insane. If you look back here, let's see that graph here. For a while, because Luna was so, the Terra ecosystem was so big, right? Ethereum was down to almost 50%. Now it's back to 63.4%. Okay, that's insane. Okay, that's totally insane. All right, so let's go back to the presentation. Can the Luna UST system recover? So these are excerpts from the LFG. They say the Terra ecosystem is one of the most vibrant in the crypto industry, with hundreds of passionate teams building category-defining applications within. There are thousands of developers in the Terra ecosystem and millions of investors. Okay, so it's not a small thing. As long as these builders, TFL among them, continue to build, we will come out of this together. I think, I don't know how long it's going to take, but I'm optimistic. I think the Terra system will recover. Hopefully, they're going to put some safeguards in place for this to avoid repeating this. I think it's going to come back. Before anything else, the only path forward will be to absorb the stablecoin supply that wants to exit before UST can start to repeg. There's no way around it. So this is Do Kwon explaining what they're going to do. Okay, I'm putting the links to all this stuff in the description so you can read the details. But essentially, the best thing to do is like wait until people stop panicking like crazy. Okay, and they're going to try to help the UST repeg. Okay, so I don't know how low Luna is gonna go. Probably a couple of cents, maybe. But at some point, people are gonna stop dumping Luna, and then the system is going to recover. Okay, you have to understand that this is a major crisis. It's like a heart attack. Okay, on a human being. So major crisis on this system. It's not going to recover in 10 minutes. Okay, it's like getting a heart attack and being shot in the heart 5 minutes later. It's not a good situation. Okay, they are constantly under attack right now. Okay, the price when you see these dips like this doesn't happen by themselves. Okay, there are people helping the token crash right now. Okay, I mean there's the original attacker, and then there's the sharks. See, the original attacker is like a big whale, let's say, and then you have sharks following and trying to eat what's left of the carcass of the Terra system. Okay, and they're trying to push it down and down and down and down and down and down as much as possible. And that's what's happening. We saw this. Okay, I wanted to give you an example of a guy who decided that UST was a good investment a couple of days ago when it was down to 70 cents. Whoops, down here. Further. Here. Peck Shield shows that Sifu bought $4 million worth of UST. Bought it at 0.72. Now it's at 0.5, so maybe I'm not sure if he regrets or not regrets his purchase. But soon after he bought it, the price recovered to 90. So for a short while, he made a profit. I don't know if he sold at that time, and I don't know what happened. Maybe he's still holding on to his UST. But if UST repegs, okay, and you're buying it right now at 50 cents, well, you double your money. Okay, it's a bet. It's not an investment advice. If you do it, okay, think, okay, it could go down to zero. Am I willing to lose that money or not? Okay, there's always opportunities. You look at this, okay, and you say, all right, there's several hundred protocols using the Terra ecosystem. There are thousands of developers using the Terra ecosystem. There are millions of investors using the Terra ecosystem. Is it going to go down to zero and vanish in a couple of days? You know, I mean, there's so many big brains working in the Terra ecosystem. I'm sure they're going to figure out something. Okay? Is UST going to repeg tomorrow or in a week, in a month? I don't know. Okay? But my bet is that it's probably going to repeg. Okay? So you have many ways of playing that bet. You could buy some UST at 50 cents on the dollar right now. Or you buy Luna at a couple dollars when it used to be $100 just a few weeks ago. Okay, and hope that it's going to go back up. Those are bets. They're very risky. Luna could go down to zero. Do Kwon could commit suicide tomorrow, and I don't want that, obviously. But and said, oh, the heck with this, or retire. Let's say he says, oh, the heck with this crazy Terra Luna thing. I don't want to get involved anymore. Okay. So anything can happen. Anything can happen. Remember that. Okay. So always be careful. All right. So go back to my presentation. Almost done, folks. What lessons can we learn from this? Well, the very first one is I know Warren Buffett is against that, but I'm very much for diversification. Okay? Diversification is necessary in the crypto universe. Never ever invest all your assets in a single token or a single protocol, even for that matter, a single blockchain. Because right now, whatever you had in the Terra blockchain, well, it's kind of stuck there right now. All stablecoins are vulnerable. All. Doesn't matter which stablecoin you've got, USDT, USDC, DAI, MIM, Matic, UST, as we saw, or any of the new ones that are coming up. We need to use a basket of stablecoins coming from various protocols and probably various chains as well. Okay? Markets are volatile and unpredictable. And remember this, volatility is necessary. We need volatility. If there was no volatility, basically you buy Bitcoin, let's say at $1,000, and it stays at $1,000 forever. You say, why the heck am I buying Bitcoin? Right? You want volatility. You want it to go up and down, up and down, up and down, up and down, because people make profit on price variations. Okay? Whether it's going up or down, you can make a buck. Okay? So remember that. It's a necessary evil. 99% drops are not impossible. We just saw that. Okay? Luna went down 98% in 2 days. Okay? Remember that. 99% drops are not impossible. Doesn't matter what token you buy. Even Bitcoin could drop 99% tomorrow. Who knows? Okay? Only invest money you are willing to lose. These, I think I'm going to write down and put that on t-shirts or something so people can remember them. Okay? These are basic things, okay? And people keep forgetting that. And I keep talking about them, and like I made 300 videos so far, and I keep talking about this. All crypto assets are risky. Any crypto asset can go down to zero, any of them. It doesn't matter which one. Ethereum could go down to zero. I know it sounds impossible right now, but it could. No investments are always safe. And that's for outside crypto also, like the US dollar. Think about it. Inflation is eating your US dollars at 8% a year right now. That means if you have $100 at the beginning of the year, that $100 is worth only 92 at the end of the year. Think about that. Okay? So even holding US dollars is very risky. Real estate. Remember the real estate bubble in 2008? Yeah, it's risky. Stocks, well, you can see it right now. Stock market has been crashing like crazy in the last few days. Bonds are worth less right now. They're not worth the paper they're printed on. It's toilet paper right now. Okay? Honest, no joke. Crypto, well, I don't need to explain. I think you get the message on crypto. So what do we do now? Right? Chill and watch Netflix, okay? Get a subscription to Netflix or HBO Max, okay? And chill out, okay? It's not the end of the world, okay? I just lost several $1,000s the last couple of days, okay? And I don't care. It's normal, okay? The market's crashing. A big whale went through Terra Luna, but I'm diversified. I've got other assets. I'm not broke. I'm not, going to jump off a building or the bridge or whatever, okay? And that's how you need to be feeling, okay? You need to be diversified. You need to say, okay, all right, somebody screwed us, okay, and made $1 billion profit on our back. And this is going to happen again. And again, and again, and again, and again, and again, and again, and again. Regulations or no regulations, I don't freaking care. Every time something like this is possible, it will happen. Keep that in your mind, okay? All right. Make sure you have a lot of stable coins in the portfolio, because right now the markets are very, very, very agitated. Possible recession this year. If we're not in a recession already, we're getting close. Although the US economy is probably doing better than Europe and the rest of the world. Okay, so but it's still possible that we're going to get into recession. High inflation, high interest rates, that's pretty much a given for a while, at least this year. Volatile stock and crypto markets, well, yeah, I think you figured that part out. So if you have a lot of stable coins in your portfolio, you're probably going to be able to weather out a lot of these craziness. But obviously, if you had a lot of stable coins and they were all UST, well, you lost a lot of money. Okay? And that's why I said diversification is necessary. Don't put all your money in the same place. How many times do I have to tell you that? Make sure your stable coins are diversified. Whoopsie, sorry. USDT, USDC, DAI, MIM, MAI, and there's like several others that are less known. Try to find the good ones, okay, and diversify, and deposit them on protocols that are going to give you income, a little bit like Balancer and Yearn and that kind of stuff, okay? Try to earn something on your stable coins, at least to beat inflation. So try to beat 8%, okay? Make sure that you're using protocols that have a good safety rating. I keep bringing this website up, and I'm going to bring it up again. DefiSafety.com. Okay? You don't need, if it wants to come, you don't need to jump on the first new shiny DeFi protocol that came out, okay? Because they're super risky and most of them will fail. 90% of all new protocols that come out every single day will fail. So to get protocols that are less likely to fail, you go to DefiSafety.com and you see all the reviews. And you want the good ones. See, Uniswap version 3, 96%. Now it's available on Matic, so you don't have to pay exorbitant gas fees. Same on Optimism and so on, right? So you can put money there. There are other risks, okay? But what I'm saying is that these protocols are pretty strong. And those that are in the 90% and 85% and up range are rarely hacked into, okay? Why? Because the code's pretty solid, okay? So check this stuff. You can put the reviews in order. You can sort them by highest rating. It's not working today. All right. Normally, you'd be able to sort them by ranking. The first one normally is Balancer. If we check Balancer, for instance, Balancer, you see Balancer 100%. So these are good projects. Okay, the code is very solid. Doesn't mean you cannot lose money there. Okay, but at least they're less likely to be under attack by hackers. And they have good security and all kinds of good stuff to get this good rating, okay? A lot of protocols have terrible ratings, even if they're very, very popular, okay? So that increases your risk considerably, right? So if you were to put Bitcoin or Ethereum on this and Bitcoin crashes and Ethereum crashes, yeah, you're going to lose money, even if you're putting it on Balancer. It's not going to save you from market fluctuations. But at least the code is solid. The team put security in place and so on. So that helps. What else? Use DCA, the dollar cost averaging, to accumulate blue chip cryptos you believe in, like Bitcoin, Ethereum, Solana, Avalanche, AVAX, or whatever. Okay? Whatever is your favorite crypto project. Make sure it's a blue chip, okay? Something that's been around a while, something that hasn't been doing wrong too much. Bitcoin is an all-time favorite, and Ethereum as well. Basically, dollar cost averaging means like this. No matter what the market is doing, the market's going up, you buy. The market's going down, you buy. The market's going sideways, you buy. Okay? So, every time you get a paycheck, let's say, you put $50 in Bitcoin. Doesn't matter what the price of Bitcoin is. You don't even care what the price of Bitcoin is. Okay? You get your paycheck, you take $50, you buy Bitcoin, and you leave it there. Next paycheck, you take $50, you buy Bitcoin, and you leave it there. Next paycheck, you get the picture, right? Dollar cost averaging is one of the safest ways to invest in good projects. If you believe in Bitcoin, maybe you don't believe in Bitcoin, maybe you like Ethereum more, then do it with Ethereum, whatever works for you, okay? It's a way to accumulate an asset that you believe in and take advantage of the dips and the ups as well, okay? Because dollar cost averaging reduces the price per token that you're buying, okay? And because the market is volatile, it goes up and down, up and down, up and down, you take advantage of, you buy more tokens when it goes down, and when the price goes up, then you have more tokens going up, right? And that's why it's more profitable. So right now, this works very well. Even whether the market is going down, the market's going up, doesn't matter. You just, every paycheck, you put $50. If $50 too much for you, put $20, $5, $10, doesn't matter. If it's too small for you, put $1,000 every month. Whatever works for you, okay? And you do it regularly every month. You put the same amount, and that's it. That's all you have to think about, okay? Now, the best deals always happen during market crashes. Remember that. Warren Buffett works like that. John Templeton worked like that. And most of the very successful investors work like that. They're looking for market crashes. They're looking for bargains, okay? They're looking for projects that are good, or companies that are good if they're on the stock market. And when people panic and sell for no good reason, they buy. Do we need government regulations? A lot of people are going to say, oh my God, we need government regulations on those stupid stable coins and everything. Government regulation can't not do anything to prevent this kind of attack. They're going to happen anyway. Doesn't matter, okay? It really does not matter. At some point, even USDT was losing peg. Any token can lose peg. Okay, it doesn't matter, regulated, unregulated. Doesn't matter if it's backed by an actual physical dollar per token, like BUSD is, for instance. It can go off peg. Okay, doesn't matter. People will find a weak point if there is one, and they'll depeg the thing. Crypto developers need to smarten up and give rewards to people that can find flaws in their systems. So right now there's bug bounty programs that are very popular, but they want people to look in the code and find vulnerabilities in the code. Okay, that's nice, and that's definitely necessary, but we need to expand this system to have bug bounty programs for people that say, okay, the way you're operating the protocol, it exposes you to these kinds of attacks, okay? And this is how you could fix this. If you reward people for showing you how your system can be wrecked, okay, you're going to be able to protect your system and protect your investors. And here it looks like maybe Do Kwon was not aware of this kind of attacks, okay, and didn't do much about it. Or maybe he did, and they did it too slowly. All right. Big systems like the Terra ecosystem need to be battle tested constantly. You need what the Terra Foundation needs is a team of devs or hackers or I don't know, hedge fund managers, okay, to be hired to try to fuck the system and make sure that they find the holes, okay, to be plugged. All right. They need that. They do need that. The Terra ecosystem is too big not to have that. Okay, it's a very profitable system. They have the money to take care of that. The crypto community needs to self-regulate, self-regulate, not government regulate, self-regulate. Okay, and develop better technology to prevent such attacks. Okay, so essentially, what I'm advocating for is groups like associations of developers or crypto protocols or whatever that, you don't have to be a member, but if you become a member, you have to follow a certain code of ethics. You have to follow certain guidelines when you are coding. Okay, you should not leave yourself exposed, okay, for a certain type of attacks. And these associations can teach developers how to protect their projects and protect their code and protect their protocol against such types of attacks. This has to come from within, okay? It has to come from within the crypto community, not from without, not the big fat hands of the government, okay? Because they don't know anything about crypto. If you saw Janet Yellen and her press conference about UST being depegged, she didn't even understand the words that were coming out of her mouth. And it showed. She's too old. She doesn't understand the first thing about crypto, okay? All she knows is that it's threatening her job, and that's it, okay? So, no, you don't want government regulations on this stuff. It's not going to help. It's just going to hinder. And it's not going to protect you. The same freaking whales are still going to attack you anyway. It has to come from within the community. It has to come from the crypto developers. It has to come from the crypto promoters. They have to create groups, okay, to protect the community against these attacks. And the attacks will keep coming at them, okay? But the developers should smarten up, okay? And develop better and better and better technology and better systems to protect themselves against that. So this is a very, very long video. Thank you for watching. Hopefully you get a clear idea of what's going on, okay? And don't despair, because it's gonna happen again and again and again and again, okay? You're going to have these crashes. You're going to have these attacks. You're going to have these whales that are going to wreak havoc here, left and right. Okay, so be prepared for that and be prudent. Try to follow the rules that I'm setting out in this. Okay, all right. So that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell. Download the free book. All you have to do is put your name, your email address, and hit the submit button. And again, the big fat button that says download the free book. And if you miss that button, well, don't worry. We're going to send you an email with another big fat button that says download the free book. And if you don't want to download the free book, you just go to Amazon. You pay $5.99 to Jeff Bezos, and Jeff will send me $1. See you.